We've done a series of transactions for Felicia's landscaping services. Those transactions are all very useful and good, but now I'm going to show you perhaps the most important transaction for a small business owner. It's going to be transaction 9. Withdrawals. When you have a business that you own, you don't earn a salary. Nobody pays you except perhaps you yourself. And so if your business is making a profit, or even sometimes if it isn't, you can withdraw money from it. Take it out of the business checking and use it for yourself. Well, I'm going to show you how to do that in T accounts and also how to journalize that. First of all, I'm going to need to add an account here to my chart of accounts. An account called Withdrawals. And I'm also going to need that to add this account in on my ledger account. I'll go ahead and do that right now. In my ledger. Go to the very end here. Account 611. Alright, so now I've added this account. Those are on my T accounts as well. Okay. And in my problem data here, I have withdrew $200 from my business account. I want to use that money for going out to eat with my friends or for something else. That's not really a business expense. This is something that it's personal. I'm not doing this for landscaping. I can't write it off at the government. And it's important to keep track of that stuff separately. Keep track of personal use from business use for a couple of reasons. First, if I have a lot of business expenses and I also have some personal expenses mixed in with them, it's going to be hard for me to tell whether I'm making a profit or not. Is my business doing well, or am I just going out to eat personally a lot on my own? The other reason is because when it comes to tax, it's important to be able to tell whether something is clearly a business expense or a personal expense, because the government will be interested, Uncle Sam will be interested in whether this is really and truly a business expense or whether this is something that you're just doing for fun. So, alright, let's put this on T accounts. First of all, what happened here, and I'm going to take away my totals for the moment here. First of all, my cash, my business cash went down. I took it out. So there's $200 there, and up there I'll label my transactions. And withdrawals, if you'll remember from that sheet that we memorized, assets, withdrawals, and expenses are all debit accounts. Withdrawals grows on the debit side. I have $200 more withdrawals than I did previously. Actually, I think this is transaction H. So now I have $200 in withdrawals on my T accounts, and I also need to put these on the general journal. You can find that real quick here. Here's my general journal. I'm on page 2, and this is going to be May 29, and I'll just put that number there. And this is I put the debit first. Debit is withdrawals. And the second, I'm going to put the credit, which is cash. Cash went down by $200. So now I can say and I'll just say from business. Keep it short and simple. There. Alright. Sometimes in problems you'll see things like, let me write this on the other one, you'll see things like paid personal cell phone bill of $150. The key word in this sentence here is personal. Anytime you pay a personal bill anytime you pay a personal bill, as if it's a personal bill, that means that it's a withdrawal, no matter what that bill is for. It's not a business expense. If it's personal, it's a personal expense. So I would do the same thing with this 150 that I did with this 200, even though I haven't said, it doesn't say in the problem withdrew $200 from the business account. This is not a withdrawal. This is not a business expense, and this isn't either. This is really a withdrawal. So keep that in mind as you're doing problems. And now in the next video, we are going to post these transactions from the general journal to the general